What's up guys, welcome back to another episode of Invest in You. And in this episode, we'll be going over the craziness that is the short squeeze. I'll be telling you what is shorting because even to me still, it baffles me. Like I still don't quite get it, but let's try and get grips of it. Okay, so now what is shorting? Now, if you've looked at the news and if you're watching this very late or like next year or like just another year, you'll remember GameStop. Odds are Netflix has probably made a movie of it by now if you're watching this way in the beyond. But right now, GameStop is on every single news thing. It's the reason why a lot of brokers and a lot of clearing brokerages have just lost their minds. That's why there's so much chaos going on. Let's break it down. Okay, and for those that, if you don't know, Reddit squad made meme stocks, stonks, whatever you want to call it. They went after GameStop. It's kind of activist investing and it created this entire short squeeze and they are going after big hedge funds companies, or that's what they say, and it just created a big thing. Okay, so let's first look at what shorting is. Okay, so suppose you have this bruh, okay, and he decides he wants to short Tesla shares. Not the greatest thing to do, okay, my opinion, but let's go with him. He wants to be him, let him do him. So this bruh goes and he lends shares from a brokerage. Let's say he lends 10 shares at the value of $100. Now, he's lending 10 unit shares. So just remember that, we'll get to that now. So what he does with these lended shares, he sells it to the market and he sells it at that $100 price tag. So he kind of just moved shares from one spot to another, which isn't his, but yes. Okay, then what happens is this brah is counting on this share price falling. So that means he wants to make a profit off of it, because what he's going to do is he's going to, when the price has fallen, he's going to buy those 10 shares back from the market and give it back to the lender. Because remember, he only has to give back 10 unit shares to the lender. He doesn't have to give the same value of shares back, just those 10 unit shares. So that's how short sellers bank, is they are banking on a stock going lower, dropping in value, and then they can make that gross margin on the sale of stock. But now the big thing is they are banking on the stock price actually falling. If it doesn't fall, that means you're gonna lose money because you're gonna have to buy those stocks back at a more expensive price. And that is not great. So, and also, this brah has a date to give his shares back. Like it's not, you can't just keep it there forever and wait for that miracle day that it drops. You've got a time frame. And in that time frame, usually you have to pay interest to the person you lended the shares from. So you have to consider that also. So there is a window of opportunity which you have to use. So that's why it's a very difficult game. Now, the big thing about this, it is a gamble and it's dangerous. And it's supposed to be ethically done. You're supposed to just bank on the stock going wrong. But what's happened a lot of the times, there's some foul play, there's some canoodling behind closed doors, and that's just created a lot of upset. And that's when you get a short squeeze happening, and that's what happened with the GameStop thing and the Redditors. So, what's a short squeeze? Short squeeze is when a company is highly shorted. So a company is highly shorted when the short percentage is something like 20% or more. In GameStop's example, it was 150%, meaning more shares than was available were shorted, which that part I don't get. And that's where I think it's wrong. But let's not get into that. So a short squeeze, meaning the people who short the stock, they are now struggling to find shares to actually buy back so that they can give it back to their lender. Because the big issue is if they can't give shares back, they're going to have to buy it in time so that they can give it back, and probably at a higher price. So a short squeeze is pretty much when the stock price goes up, your short sellers are worried that there won't be enough stock to actually get back and give it to their lenders. So they are kind of forced to close up their position. The term is often used, they have to cover their losses. So these short sellers quickly have to make a plan, quickly have to buy the shares back so that they can give it to their lender. And that's when they make a lot of loss money. Okay, that's just when they lose out. And that's what happened with GameStop. The stock skyrocketed and everyone who shorted it probably shat a brick or two. So because now you're gonna have to buy that stock at 400% growth to give it back to your lender, because you have a giving back date. You have to give those shares back to the lender. Because remember, when this person lends these shares, he doesn't lend the value, he lends the shares. So he lends 4 shares or 10 shares, whatever. So let's say he lended 10 shares. He only needs to give back 10 shares. He doesn't need to give the value back of when he lended it. Only those 10 shares. And that's how short sellers bank on making money. And that's what the Redditors did. They just went oil on the fire, stock went up, short sellers ran, and it was just crazy. It was a nightmare. Now there's a lot of stuff going on, a lot of policies and SEC people, and it's just a lot of things. So yes, shorting, in my opinion, very dangerous. And I just don't like shorting because people tried to short Tesla, and then short companies made like fake news about Tesla, and they gunned Tesla, and they went after Tesla. I just don't like people who go after my boy Elon, you know? And that's it, guys. That is short selling. It is confusing, I know. It took me a while to make this video. It's just crazy. I still don't quite get it. Yes, there's probably a spot in the market for short selling. I don't see it. But then again, short seller companies have a lot of the times exploited frauding companies. They've brought it to light because they benefit from it. But then they've also used it for wrong. And I mean, short sellers went after Tesla, and you know how I feel about Tesla. So just, yeah. Anyways, thanks for watching, guys. If you liked it, like the video, subscribe, and if you have any questions, comment down. Thank you very much. Bye.